All right, let's take a peek, make sure we're live. Let me know when you guys get in there, and we'll take a peek at with Trading Night School tonight. Welcome to Trading Night School. We're going to talk about corrections tonight. We're going to start looking into some more corrections. See if I can find you guys. We're going to try to understand the difference between corrections and impulse. Make sure my public. There we go. I accidentally had it unlisted. Let's see if we can find it. There we go. All right, welcome, guys. I see two of you. Chime in when you get here. Let me know you're here. This is Trading Night School. We're going to be in Lesson 5 tonight. We're going to be talking about corrections. We went over the basics of corrections last week, and we're going to get into just some more detailed understanding of what corrections look like and how to recognize them and how to trade by them. All right. What's up, Shasta College? Glad you found me, man. Glad you found me. Hope you're ready for Trading Night School. You ready to rock? I have an energy drink, which I never drink, but yeah. 5 of you here. Awesome. Make sure we got sound. We got sound. Good deal. Video and sound look good. Give me some feedback there. We'll kind of wait for everybody to get in. I'll do a little Bitcoin TA while you guys are coming on in. Hey, what's up, Sherlock Holmesy? You ready for Trade Night School tonight? I hope so. Hope you guys are pumped for it. I hope you guys are learning. I've gotten a lot of good feedback from you guys. Just as how things are going, and learning a lot. I really, it's exciting to me that you guys are learning so much. I hope right now we're just building our knowledge of Elliott Wave and understanding how to trade. We're going to be learning how to trade by it soon, but we have to understand the way it flows first of all, and begin to try to recognize these patterns and work these counts. So. Awesome. Thanks for that feedback. What's up, Hamed? Glad you're here, man. Let's learn some Elliott Wave tonight. What do you say? Ear is itchy. Sorry. All right. I'm going to do a little Bitcoin TA while everybody's kind of popping in. There's 6 of you following each of your videos. Awesome. Yeah, Hamed, we're not getting a pump to 10K. I don't know. I'm not seeing it in the chart, but it could be there. Just because I don't see it doesn't mean it's not there. I'm just not seeing it. I am currently short, and I'm still short. I've been short since $9,600. I played a breakout move because we were being so tricked up in here. Waited for the breakout right here. It got in right there at that candle. About 95, 90 something, 96. Going down, down, down. This is an expanded flat here, y'all. This is the same move, by the way, right here. That's the same move we have on the macro. I just want you to pay attention to it. See this right here? It's an expanded flat, just a very large one. So you have a small one right here. See it? It's this. That's what that is. It's an expanded flat. 3, 3, 5. And that 5 is very impulsive, comes with divergence. You say, well, what does it do? Well, it fakes everybody out. This this looks corrective. We got a three-wave structure. Then you get a structure that breaks the low of that right there. It breaks the low. And what happens when everybody, what happens when you have a low here, guys, and then you get another low right there? What happens when you get another low? People think, oh, it's another low. So what happens? Everybody goes short right here. So I don't play breakouts a whole lot. I play them a lot more on trend lines like this than I do horizontals. But anyway, I don't play breakouts quite like that. So I actually play the waves more often than I do breakouts. I very rarely do breakouts, but on occasion I'll do it, especially when I know the count is demanding that we're getting ready to turn around. So anyway, so this flat breaks the low, entices shorts to come in, and then it just reverses really fast and really high. Anybody that got short here messed up. They get wrecked. Okay, and then they get out of their trade, and then they go long up here. Oh, they get long right up here. And what happens? Well, price continues on down the way you thought it was going to go, because this is a corrective structure. Boom. So anyway, yeah, that's an expanded flat, best I can tell, and that means we're heading on down some more, unless it turns into a complex correction, which we'll talk about. But anyway, that's the very same thing we have on the macro, guys. Very same thing. Let me show it to you on the macro. I showed it in the video today, but I'm just trying to show you that they're all over the place on the micro and the macro. So here you have a three-wave structure, corrective. Then you get this move right here, and it breaks the low. Okay, it comes down pretty significantly, and then it just booms. I mean, and this one, you know how powerful it was, right? You remember how powerful that was. Okay, it makes everybody think there's a change in direction, but there's no change in direction. It's a fake out, and price is just going to continue coming down like that. So yeah, pump to 10K. Don't think so. I'm not seeing it. I mean, so I know some people. I mean, I even mentioned this as a possibility today, that it could do this. I mean, it's possible, but the wave action isn't showing that to me. The wave count isn't showing that to me. But I mean, it could. If we get a reversal before we make another low, maybe. All right, there's 11 of you here. Wow, I think our class is dwindling. If you're here, just let me know you're here. If you haven't chimed in yet, you got Shasta College, got Hamed, got Sherlock Holmesy. Glad y'all are here. This is Trading Night School, and I was just kind of doing a little Bitcoin TA, while we're waiting on everybody to get in. So, what's up, Jeremy? You ready for night school, man? We're going to get into some corrections here tonight. Glad you're here, Jeremy. Lost somebody. All right, well, I need to start reminding everybody of night school. What's up, Max? You gonna teach tonight? Can you teach this tonight? Awesome. How many of you, this is your first time hitting the Trading Night School? Like, this is your first session you actually caught live? And then I'd like to know how many of you have watched all of the Trading Night School lessons that we've done so far. There have been 4 of them. Yeah, man, no worries. Max, you probably already picked up on this stuff anyway. You're pretty proficient in what I'm teaching tonight. So, awesome. Cool. Let me ask you a question, Sherlock Holmes. Give me some feedback. Is it becoming clearer? Are you beginning to understand Elliott Wave a little bit as you begin to just start? Are you starting to see it a little? Good deal. Good deal. Hey, yeah, that's why we're recording them and leaving them up. We want everybody to see it, Shasta. So, yeah, glad you're watching them. And ultimate at the end of the day, I want you guys to avoid losing your money as traders. So be careful as you begin to start trading. You just because you can begin to understand the Elliott wave count doesn't mean you can trade it. Because like even today's move messed up some people. So just realize that there's a lot more to trading than understanding the Elliott wave count. The main thing about trading, guys, the main thing you have to have is stable psychology. Okay, you got to have just even keel psychology. You got to be able to hold a bad trade sometimes. Sometimes you've got to know when to hold it and know when to fold it. And that's funny. I should start singing, but I won't. But you do have to know when to hold it and when not to. Oh man, I'm trying to get my phone here, guys. I'm trying to charge it, and you can't set it up vertically and charge it at the same time. All right. Well, bummer. Maybe it's Halloween night. That's where everybody is, or I don't know. Maybe everybody's busy, but we're gonna keep rocking night. All right. Let's get going. We're gonna just do a review from last week. Okay. I want to remind you of the impulse wave. Just run through the rules really quick, and yeah. I want to run through the rules of an impulse wave with you to remind you of an impulse. An impulse is a 5-wave structure always, okay? It's going to be 5 waves. Boom, 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 like that. The third wave does not have to be the longest. That is not the rule. The rule is it just cannot be the shortest. So there's the first simple rule, that the third wave cannot be the shortest. But it is a wrong thing to assume that it has to be the longest, okay? So it doesn't have to be the longest, just cannot be the shortest. 5 can be the longest, 1 can be the longest, but 3 cannot be the shortest ever. Now, secondly, the 2-wave, when we talk about the 2-wave, it cannot retrace below the origin of the 1-wave. It can't even wick beyond it. It's not even allowed to wick beyond it. So the 2-wave cannot retrace beyond the level of the 1-wave. If it does, you're not dealing with a 2-wave. You're dealing with something else. Okay? So that's another rule. A third rule you need to remember is that the 4-wave cannot ever retrace into the level of number 1. Okay? It needs to stop and reverse before the level of number 1. Now, for me personally, I will allow a wick on an occasion. I'd like to, if there's a wick here and a wick here and the wicks kind of touch each other, along a line, I'm okay with that. But in general, the 4 cannot retrace into the level of the 1. So if you see this right here where the 4 comes down lower than the 1, that is no good on a regular impulse. Tonight we're going to learn a structure called a diagonal, where the 4 can do that, and I'm going to show you. And we're going to try to differentiate between a diagonal and a corrective move, because often you will confuse a diagonal for a corrective move. All right. So anyway, let's see what else is there to know. What are the other rules? Those are the basic rules. So it has to have 5 waves. The 2-wave can't retrace into the beyond the origin of the 1-wave. The 3-wave cannot be the shortest wave. The 4-wave cannot retrace into the level of the 1. Those are the basic rules that we've gone over. There are some guidelines that we talk about. Each of the waves, 1, 3, and 5. Those are the impulses. It's like a boom, 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 like 3 impulses. It's just a movement of the wave. It's an impulse, or what we call a motive wave. And so when we talk about an impulse, we're looking for 5 waves, looking for the 3 to be a long wave. Doesn't have to be the longest, and we're looking for those 3 impulses. The 4 can't retrace below the 1. The 2 can't retrace below the 1 as well. All right, so those are the basic rules of an impulse. Now, when we talk about guidelines for the Fibonacci's, let me remind you of the Fibonacci. Remember that we need to learn to use our FIB Extension Tool here, trend-based FIB Extension Tool. You'll find it in the 3rd category right here on TradingView. You need the trend-based FIB extension tool. Don't forget, you need your phone, you need a tablet, something to be watching this on, as well as a computer so you can be practicing what I'm showing you. You can do what I do alongside of me. It'd be helpful. I mean, if you see me draw a wave on the chart, you try to draw that wave. If you see me throw the trend-based FIB extension tool, you try to do the same thing. And you just kind of copy and learn the things that I do. I'd recommend in the mornings when you're watching my videos as well that you try to do the things that I do on the chart. If I'm measuring a particular wave, you try to measure the same wave, and you'll just learn the skills over time that you need to have in order to analyze the market, okay, like I do it. All right, so you have a trend-based FIB extension tool right here, and what we do is we begin at the beginning of wave 1 and the end of wave 1, and we do a click at the beginning and a click at the end, and what that does is that measures the first wave. And then you can see my fibs. They're ready to sit down somewhere. Where do I start them? Well, you can see the dotted line that runs across the bottom of my screen. I'm going to get that dotted line associated with the bottom of wave 2 right there, and I'm going to bring my fibs out so I can see them, okay? And what we have here is we've got 2 clicks to measure the 1 wave, and then 1 click to tell it where to begin to put the fibs. We want to see the third wave as a general rule come up beyond the 1618 Fibonacci level, which is 1.618 Fibonacci. That's where we want to see it as a general rule. This is a guideline. It's not a rule. It doesn't have to, but it generally does. Okay. All right. So that's where we want to see the third wave, and that's how we're going to distinguish between a third wave and a corrective wave. Now let's talk about the basic corrective wave. A basic corrective wave is made up of 3 waves, and we label it with letters rather than numbers. We label it with A, B, and C. Now, what is the difference between A, B, C and 1, 2, 3? Well, you can see when it's being formed, there's not a whole lot different between the two. Okay, the main difference is that the C wave is not going to be extended in relationship to the 1 wave the same way an impulse does. An impulse, that third wave goes to the 1618 and beyond it, right? But in a corrective wave, this third wave is the C wave, and that's the end of the correction, and it doesn't go to the 1618. Rather, it stops at the 1-to-1 extension or the 1276. In general, let me show you. You get your trend-based FIB extension tool. I've got it in my favorites bar down here. I click on the beginning of A and the end of A to measure it, okay? And then I want to bring it down to the origin of B right there, and or the end of B, I should say. And you can see how my wave comes to the 1276 extension, the 127 extension, or the 1-to-1 extension. Generally, an ABC, the C wave will be a 1-to-1 extension of the first wave, A, or it'll be a 127 extension of that. It can even come up and wick through the 1618, but generally it'll just wick it and then it'll bounce right off of it. Okay, so that's how you can determine the difference between a corrective wave and incorrect. A corrective wave and an incorrect and an impulse wave. Excuse me. Let me just check the. What's up, Edward? Glad you made it. Glad you made it. Okay, so here's what I want to do. I want to practice with the FIB extension tool, guys. We really need to practice that skill, okay? So I want you on your charts, I want you to draw an impulse wave that's 5 waves. I want to see that 3 wave to be nice and long, okay? The 4 wave, make sure it doesn't retrace too far back into the wave 1, okay? And the 5 wave should be about proportional to the 1 wave, okay? I want you to create an impulse on your screen, just like that. And I want you to give me a notification in the chat when you've got that created on your screen. What you do is you come over here to the 5th one down, 1, 2, 3, 4, 5, and you're going to find the Elliott wave Elliott impulse wave. You're going to click that, and then you're going to go ahead and draw with 5 clicks. You'll get it done. All right, let me know you've got it done. Just say done in the chat. Those of you just joining us, make sure you get your trading view opened and your laptop's ready, and you're late to class, so I'm glad you made it. All right, Christina, good deal. Good deal, Shasta, Sherlock, awesome. Let's find out who else is joining us. Who else is joining us? I want you to draw an impulse on your screen on a blank part of your chart somewhere. That's the job that we're doing right now. I want to see 5 of you finish it. Finish that task. Da-da-da. All right. I need one more of you. One more to finish. I don't believe Max because he's working. He said he did it, but he's lying. Stinking Aussies. Always lying. He's my friend. All right. No problem, man. Glad you made it. Get an impulse on your screen. All right, now let's practice with the trend-based FIB extension tool, okay? What I want you to do is get your trend-based FIB extension tool open and activated. And what I want you to do is measure the first wave with 2 clicks. So start at the bottom of wave 1 right here, click it, and the top of wave 1, and click it, okay? Bottom and top of wave 1, and click. Then bring your third click down to the bottom of where 2 ends, okay? Awesome, Todd. Thank you. You're my 5th. Very good. And I want you to measure it, okay? And I want you to measure where your third, when you drew your third wave, where did it come to? I want you to measure where it came to. I would like you to note that your third wave really needs to come to at least the 1618, okay? So if you don't have it there, let's get that third wave up there. No problem, Tanya. Glad you made it. Glad you made it. We're practicing with the FIB extension tool. That's a critical tool you're going to have to learn to use. We're getting ready to. We're practicing on our wave, but we're getting ready to use it in the real market. So no worries at all. Okay? All right, now that you've got that done, let's measure. I want you to put a corrective wave on your screen like mine. Put a corrective wave on there. And let's measure a corrective wave in ABC. So use the ABC function right here. Draw it with 3 clicks. Make an ABC on your screen. And then I want you to take your trend-based FIB extension tool. I want you to measure the A wave, okay, the A wave. And you're going to measure you're going to start with the wave starts, and you're going to click the bottom of it and the top of the A wave. Then you're going to come down to where B wave ends, and you're going to measure it. And you want to make sure that C wave stops at the 1-to-1 or the 127 extension. All right, how do you display the numbers on the right side? I like it on the right side. So what you do is you just double click on the tool, or you can click it and then you hit the little settings tab, however you want to do it. I usually just double click the numbers there, and it brings it all up here. And then what you do is you go to visibility here at the top, okay? Let's see. Is that, no, style. Yeah, you go to style. Down here it says levels. You want values. Labels, you want it on the right. On the right. Right there. Where it says labels, you go to right. And then the middle is where you want the numbers. In the middle of the line, at the top of the line, at the bottom of the line. I have mine right at the middle of the line there. Yep, no problem. Yeah, we did our trick or treating too, so no worries. No worries. Oh. All right, so you should see your ABC correction stop at the 1-to-1 or the 1276. If you don't have the 1276, just double click on yours right here, and then make sure that in one of the numbers, I don't care which one, I use the red because I mean I know my colors, like as far as what numbers are associated with colors, and so I know my blue is 786, my white is the one extension, my 1276 is red, and my yellow is 1618. So I know those numbers. That's the way I do it. You find colors that you like and that you can see on your chart. You just make sure you have the 1276 in there, okay? Some people have the 1272. I find the 276 is hit more often. Okay, so you should be basically understanding how to use your trend-based FIB extension tool. So let's go to our Bitcoin chart. Let's get the latest waves on the screen. Let's be in the let's get into the 30-minute time frame. Let's do the 30-minute time frame. Let me look at BTC just for a minute because we're getting a little bit of a pump here. I want to see if I need to do something. Okay, all right. Now, so I want you to get on let's get on the 30-minute time frame, and let's measure some of these waves. Let's get this structure right here, and let's just practice using our trend-based FIB extension tool. I want to show you how to do it. Okay. Now, what you want to do? Let's take this wave right here. So get it so you can see that first wave right there. Right there. Get it so you can see it. Okay, now I want you to take your trend-based FIB extension tool and I want you to begin at the beginning of the wave. Okay? Just beginning at the beginning of the wave and click, which is at the top of the wave, because this wave is going down. So we want to start at the beginning of the wave. Okay, so we're going to click that guy, then we're going to click the bottom of the first wave, the wave 1. So not all the way down here. Okay, we're just going to come right here to the first wave that we see and click it. So that measures the distance between there and there. Okay, then after that, I want you to, then this 2 wave or the B wave comes right here. So let's bring our fibs over here so we can see them. Okay, and let's make sure that dotted line gets right to the top of 2. Okay, and you'll notice that this one extended, this particular wave extended to the 786 extension, the 0.786 extension. I'm already in a short wave, waves of glory awakenings. I'm already short. I'm actually trading it to the downside, but I'm not telling you. No, oh, you're asking me. I thought you were saying something. Yeah, this I'm not giving. This is just trading night school. Not really answering Bitcoin questions right now, but yeah. All right, so what you can see is that the extension of this wave came to the 786. It did not even make it to the 1-to-1 extension. This is very this entire wave has been kind of doing that. So let's try another wave now. Let's just do another one. So let me clear my alerts here because they're bothering me. Okay, now let's take, so this wave is finished. Now let's measure this wave right here. Okay, so let's take our trend-based FIB extension tool. Let's measure the bottom of the first wave. So this wave goes in this direction, right? So we want to measure this, the first wave. Okay, then what we want to do is bring the third click to the bottom of the two wave. There you go. Now, what I want to show you is that this wave extended to the 786. It didn't even make it to the 1618. Didn't even get close to it. So this is what we call a corrective wave. Okay, that's a corrective wave. That is not an impulse. Okay. Now, what that means is price is not going impulsively to the downside. It's going correctively to the downside. All right. Well, that's a big deal. Why is that a big deal? Well, if price is going correctively to the downside, there's another scenario, though, I'm going to talk about in just a minute. That means a corrective wave goes against the trend. So we had right here, oops, sorry, an impulse right here. That's an impulse. I mean, if ever there's an impulse, that's one. 1, 2, 3, 4, 5. 5 waves, and they go straight up, buddy. I mean, that's an impulse wave. Nothing corrective about it. Okay? But then, after an impulse wave, guys, what you get, 4, 5, okay, is after an impulse, you're going to get a corrective wave. Now, that corrective wave needs to measure, when you measure the first wave to the second, it needs to measure to the 127 or the 1-to-1 extension, even the 786, okay? But if that wave comes down to the 1618, pulls back and then makes another wave, that's another impulse wave, okay? So you need to understand that. So the impulse wave, the direction of the impulse wave is generally, not always, but generally the direction of the trend. Now we're going to talk about expanded flats if I can get to it tonight. And we're going to talk about what I'm seeing there in the chart. But anyway, so what we're trying to do, what the skill I want you guys to get tonight is I want y'all to understand how to determine if a wave is an impulse or if it's a correction. I want you to begin to use the Fibonacci tool that I'm showing you, and I want to just decide, is that an impulse or a correction? Okay? Now, let me remind you of a couple of things. 1, 2, 3, 4, 5. An impulse needs 5 waves, and this third wave right here, who knows what level, the Fibonacci extension level, that third wave needs to come to? Who knows that answer? Waiting for the video to catch up on my end. Good job. Good job. The 1618. Perfect. And if anybody else was going to type that, that's the correct answer. So when you see 5 waves, okay, and that third wave comes to the unknown now, it wouldn't be the 0.618, it would be 1.618. It would be the 1618 extension. The 0.618 is actually shorter than 1-to-1. Let me explain what the difference is between the 618 and the 1618. When we use the extension tool, the first wave is a certain length, right? The third wave will be a certain length. Well, the question is, what is the measurement of this wave compared to the measurement of that wave? Well, if I could just take this wave and then just drag this wave over next to it, we're going to find that this wave is 100% of this wave. But it's got a lot more. The question is how much more? Okay? So what I can do is take my trend-based Fib extension tool, I can measure that wave and then compare it, and it's actually more than 161%. So what I drew is actually greater than 161% of that first wave. So what we're doing then is we're comparing, we're asking the question, what is the wavelength of this third wave in comparison to the first wave? That's what the trend-based Fib extension tool is telling you. So when I measure the first wave, click, and then measure from the bottom of the third wave to the top, you can see that this wave came up to 161%. Not 61%, which is down here, the 0.618. It's the 1.618. That's 161.8. I mean, it's 1.618. It's 161.8% of wave 1. And in an impulse wave, you need that third wave to hit that 1618. Otherwise, it's very weak. It's not an impulse. It's something else. Okay? So if you see 5 waves and the third wave hits the 1618, you've really got a high likelihood for an impulse on your hands. Okay? So let's check this out. Let me ask you guys a question. Let's measure this wave right here. So let's just measure this wave right here. So we're going to take our trend-based Fib extension tool. We're always going to measure only the first wave. So there's the first wave. We're going to start at this wave is going to the upside, so we're going to start at the bottom of the wave and go to the top of the wave. Okay? And then we're going to bring it down to the bottom of the next wave right there to go up. And we're going to measure it. And look on my screen, what Fibonacci level did it hit? What extension? So right here, the length of this wave here as compared to the length of that wave, what is the comparison? How much bigger is this wave than that wave? Or what's the size comparison? What's up, Spartacus? Hey, Darren. And Jessa, glad you made it. This is Trading Night School, so I'm not doing a lot of TA, though we're kind of messing with the Bitcoin chart. I'm doing more teaching of how to measure these waves. Good, Shasta. That's right. It came to the 1618. So let me ask you a question. If this came to the 1618, doesn't that mean that this is an impulse wave? Yes or no? What do you think? There you go, Ethereum Bank. Well done. So this wave is 161% of that wave. Very good. So is this an impulse wave? I mean, it made it to the magic number, right? Who thinks it's an impulse wave and who thinks it's not an impulse wave? And then I want you to make your case. Tell me why you think it's an impulse wave and why you don't think it's an impulse wave. I'm going to have some popcorn while you do that. So unknown now says yes, it's an impulse wave. Shasta says not necessarily. So that's not a no, it's not a yes, it's a maybe. Tanya says maybe not. No 5 waves. Hamed says no, it's definitely not. Okay, so let's apply our rules here and see. First off, let's count the waves. Let's just count what we see. 1, 2, 3, 4, 5, 6, 7. There's 7 swings in that one, buddy. If you say this is 1, 2, and that's 3, who is it? Hamed sees that 4 came below 1, so that can't be. right? So that can't be wave 4. So if we count it like this, 1, 2, and 3 is up here, 4 and 5. How do y'all like that one? Does that look like an impulse? Does that look like a good 5 waves? Yes, for an impulse wave, you got to have 5 waves. But the second thing that we're looking for is that we want to see the third wave come up to the 1618. What's the problem with this? The third wave doesn't make it up to the 1618, if that is a third wave. Okay, so yeah, you can see 5 waves and it looks okay, but the problem is the third wave is the one that has to hit the extension. So it needs to look like this. On an impulse, the third wave has to come up here, and then the fifth wave is going to extend higher than the 1618 in general. Does that make sense? Tanya had a light bulb moment. Light bulb. So what we have here actually is not an impulse wave at all. It has to be interpreted as something else. Why? There's not 5 waves that are clear, number one. And well, I mean, there are 5 waves, but there's a really weird wave right in here that really screws things up. Okay, excuse me. And then secondly, the third wave doesn't come to the 1618. That's not an impulse. So let me show you. And I would say, Hamed, it's not a diagonal either. It's actually, in my count, that's a WXY. And let me show you why it's a WXY. You're going to see it here. Now, let's remind ourselves what an ABC looks like. ABC looks like that, right? And then what's the extension? Is like that. Now, the ABC is 3 waves, and the end of this wave actually should end between the 1-to-1 extension and the 127 in general, for the most part. Okay? Now, I want to show you something. I measure the first wave and down to the second, so we'll leave the fibs there. I'm going to get real big here. Can you see it? Okay. We got a wave here, and then our next wave is here. Where does this wave come up to? What extension does this wave hit? Who knows what extension that wave hit? If I simply get rid of all that and just show you that wave right there, what does that look like to you? Good, Hamed, good. Seth, very nice. Hits the 1-to-1. When a wave is 3 waves and it hits the 1-to-1, what does that remind us of? What is that showing us? A, B, C. There you go, Sherlock Holmesy. Nice. So that's an ABC correction just right there. If I take the rest of the chart away, it becomes really clear. That's an ABC. Now, our group, we took this trade. We took this trade when this happened. It was a high probability trade. Okay, because here we had the structure came down. We got an ABC correction, came to a 1-to-1 extension to the 1276 in that ballpark. Looks like a zigzag, and so the next move should be down, right? And so we took the trade up here. We entered short right here, and that seems like that's a good trade idea, right? Because the next move, if that's a correction, it's coming on down. The stop should be right above this region, the 1618. The stop will be up there. Why is the stop up there? Because if this wave comes down and then comes back up and gets up here, then we're talking about an impulse. So, but this is a trade that we took because this was an ABC shape. It came to an ABC extension, expecting an impulse. We actually were treating this like a diagonal. 1, 2, 3, 4, 5. We'll talk about that later. Had a 3-wave pullback, and we should expect an impulse to the downside. And that would have been a big ABC, right? And Hamed took that with us. You took that in our group. But what happened to us? Let's replay it. That was really fast. Let's go back. Let me replay it right there. We're going to replay it nice and slow. Watch what happened to us. All right. When we got that candle right there, that's a 30-minute candle. When we got that candle, how do you think we were feeling about yeah, we did it 4 days ago. How do you think we felt about our trade right then? ABC, got a reversal candle, feeling really good about our trade right there. I mean, I was feeling really good about it. I'm like, oh, we nailed it. It was beautiful, right? Watch what happened. They took a simple zigzag. Let's speed it up just a little bit. Got a little bit of a indecision here. Got a little bit of a retrace. I was expecting a retrace. Starts to come up. I was expecting it to continue on down now, but nope. Kept coming. It kept coming. Oh, no. No. It's got to reverse. Come on down. Come on down. Come on down. We're rooting for it. Oh, man. What happened? It's coming back up to our entry. Kind of freaking out right now. Kind of getting upset. What's happening? Okay. It's reversing. We're good. No, it's not. No, it's not good. And it kept coming up. And so that was an ABC. And then what happened? What happened? We had a good trade to this downside, and they just came and took it all back. We got stopped out of this trade. Sucked. We got fooled on that, right? Price came up. Price came up. Let's keep watching it. We'll keep watching it. Go a little faster here. Now look what price is doing. Okay, it came up. It's coming down a little bit. It's coming down. And now it's going to come up some more. All right, let's stop right there. Now let's look at the structure. So we still have a zigzag. This came to the 1-to-1 extension. But what happened is it came down and then it created a new wave. And I want to show you what that is. So let's forget this wave for now. This middle wave, let's forget that wave. And now let's measure the next wave. Okay. So here's the bottom of that wave. I'm going to click it with my trend-based FIB Extension Tool. And I'm going to click the top of the next wave. Then we're going to come down and measure that. What we have here, this came to the 786, which an ABC correction can do that. So what do we, if I forget all of this, what do I have just right here? I have an A, B, C. So now I've got this ABC and another ABC. It is not a 5-wave. No, it's not. We already said it's not a 5-wave for sure. This is an ABC. Came to the 1-to-1. It's another zigzag. That's right, Hamed. So when you got a zigzag and then some other wave and then another zigzag, do you know what we call that? We call that a double zigzag. And do you know what a double zigzag is called in the Elliott wave world? It's called W. First zigzag. X, there's your X wave, and your Y. That is a WXY correction. How y'all doing with that one? Any light bulbs there? Eat some popcorn while you guys are answering. Do you understand that? What they did is they took it from a simple correction, ABC, and they created a complex correction, which they can do all the time. So you never know when you're going to get a simple correction or a complex correction, and that's what makes trading in this market very hard. Doesn't mean we can't trade it and we can't win. It just means it's challenging. It's really hard. And that double zigzag was designed to take your money. Sorry. Exactly. That's the better move, Hamed. And you're learning patience, man. I love it. Love it. Yes, yes, yes. So after that corrective wave, there's a couple of ways you can play it. You know, I like to play it at the top but the safer way is to wait for the 1-2 of the next wave. You get the 1 wave and then the 2 wave. There's your entry. 3, 4, 5, like that. Okay. Okay. Now let's continue on. Let's see how this thing plays out. Going down. Okay. All right. Stop right there. All right. Once this wave started coming below the last wave right there, it kind of lets you know that you're dealing with a reversal. Draw your trend lines, okay? Once this trend line was broken, I signaled to my group, safe to enter short. And we entered short right here. And it's been a safe entry ever since I took it. Correct, Hamed. The second wave won't go above wave 1. Awesome. Well, okay, why do I enter at the top and short it? Well, here's why I like to do it. Number one, I like to nail my entries. I mean, nail them. I love to nail an entry. And the higher on the wave I get, actually it's the less it's actually less risk to do that. Let me show you. Let me show you guys how to measure this WXY. I didn't show you, I meant to, so let me show you. So what you do when you get a double WXY, once you realize that you've got a double correction going on, you can guess where it's going to end. So what you have is ABC. Okay, so I'm just going to measure that whole ABC right there. With a click on the bottom, click on the top. And then I'm going to put it at the bottom of the next wave, the X wave right there, the W, and then X. And what you're going to find is that the Y wave generally comes up to the 1-to-1 extension, usually. So let me make sure I've got it right on the tick here. There we go. There we go. All right, I think I got everything right on the tick. And you can see how we came up to the 1-to-1 extension, and then we had this reversal candle, and then we had another couple candles that were reversal. So for me, once I saw this wave coming up here, that would have been a decent entry. But we had already been stopped out, I think, twice in here, so it made us a little gun shy. So what I did is I waited until this broke my trend line. I drew the trend line. It broke the trend line on that candle right around $9,600, and this is where we entered the trade. But right here, you could have entered. See, here's the cool thing. You could have entered at the 1-to-1 extension right here, and then your stop is up here. If it continues on, it makes another high, or it goes on to the 1618. Now, for me, the stop is pretty high up here, right? So I don't like my stops being quite that high. So I try to enter as close to the stops as I can. Now, why would I put my stop at the 1618? Well, because the trade idea here is that this is a corrective wave. and it's going to end at between the 1-to-1 extension and the 1276. I had no idea whether this was going to go on up to the 1276 or not and then come back down. So that's why I decided to not enter here, but I waited for this to break the trend line. Once it broke, I was like, okay, that 1-to-1 was what we got, and then it broke down. So that is why I entered the trade here, right there, to the short side. What's up, man? I'm glad you caught the channel too. So let me show you the trade idea with an ABC, guys, so you understand. And I'm going to show you how I applied it last night. We got stopped out again today, except I held the trade, and I'm fine in it. Of course, I've been fine in it, but you know, I would have held it. Of course, the higher, the better entry, the longer you can hold through the chop. So let me show you the ABC trade entries, just so you understand how we're going to begin trading this. If you have an ABC correct, if you're expecting a corrective wave, after a correction, guys, you're expecting more impulse to the downside, right? So, guys, and tell me if I'm losing you, okay? I don't want to lose you. But when we have an impulse to the downside like that, right? We got an impulse wave. This 3 measures to the 1618. It's an impulse. We got 5 waves. It's good. What do we expect after the impulse? We expect a 3-wave correction, right? Well, we need to see that 3-wave correction. We need to see that measure correctively. So we need to see it come to the 1-to-1 extension or the 1276. We want to see that wave come to the 127 or the 1. So the trade is you generally want to see 5 waves in this wave, depending on the structure, and that. But generally, if you got an A, B, C, C always has 5 waves. So you're looking for 5 waves, and you want to find those 5 waves ending around the 1-to-1 or the 1276. Once you have that finishing there, you enter the trade right around those fibs, and then your stop goes right here. See how close your stop is? It's just above the 1618. Because if this wave continues on to the 1618, we don't have a corrective wave. What we've got is an impulse wave. Okay? And so that would mean that your trade rationale is broken down. You stop the trade out, and you look for another entry another time. So that's the trade with an ABC. That's how you trade an ABC. Okay? So basically, once you get your A and your B wave, you project where the C wave is going to end by putting your fibs. Okay, so here's what you do. So you get an impulse wave to the downside, just like this, right? Then what you do is you wait for your A wave to finish, and then you wait for your B wave. And once it starts to go up from there, after that A wave and the B, put your fibs on it like this. You measure the A down to the B, and then you watch that wave come up. You watch that wave, watch that wave, watch that wave, watch that wave. Oh, got a little bit of reversal. Nope, going to come back up. Now we're going to reverse here and go down. And a lot of times that's what it'll do. It'll have a reaction off the 1-to-1 extension, and then it'll keep pushing up, pushing up. Watch the reaction off the 1276. You get a good reaction, enter the trade, stop goes up here. Okay, does everybody understand that trade idea? How we begin to trade the corrective waves? Because why is our stop up here again? Because if this wave continues to come up here to the 1618, this isn't a corrective wave, and this impulse, and it's going to continue going, and we have the wrong direction. Now, if it's a corrective wave, guys, what do we expect? What do we expect it to do? What do we expect price to do if that's a corrective wave? Well, if this is corrective, where's the next move after that correction? Going to get another impulse to the downside. Should. Okay? So there you go. That is how you trade. I mean, that's one way to trade a corrective wave. So back to over here. That's what we did here. We got a 3-wave move right there. We got a 3-wave move. It measured to the 1-to-1 extension. We entered the trade, got a reversal candle, felt really good. Once price came up here, it came above us and came past the 1618, we got stopped out. Okay? And that's a bummer. But it happens. We keep our losses small. But finally we get in the trade the right way. We got in, you know, it would have been nice to get in up here. Would have been really nice to get in up here. But we got in here, price came down, and then we just got all this chop. It just kept coming, and that's all we've had, and it's just been crappy. And we're finally starting to get some movement, you know, to beyond where we are. Let's go a little faster here. Chop. So see how it's staying near our entry. Price kind of keeps coming back to the entry. It's going down a little bit, comes back. It's came back to the entry area. So they keep, what they did is, there we go. Sorry. So you know, we got in our trade right here, waiting for downside. Came back, came down, came back, came down, came back. But notice it's going down. It's lower lows, guys. We're making lower lows. Okay. Price is going to go down. What do you think is going to happen now? It's probably going to come back. But eventually, it's not going to come back. In fact, my belief is that the next time this thing makes a dive, makes a play for the downside, it's going to continue down to our lower targets. Eventually, it's going to stop coming back to us that fast. Okay, so this is where my entry was right for this trade. And guys, y'all have to learn how to be patient. Somebody might get out of their trade right here because it came back to your entry point. Oh no, it's going up. No, it's not. Okay, they do that stuff to you all the time. Remember, where's the stop for our trade? It's up here. Okay. So we hold on to our trade even if they bring price against us a little bit. We hold that sucker a little longer, okay? Because we know it's coming down. Because what's going to happen? Listen, guys, what has to happen after a three-wave correction? After a three-wave, guys, you're going to get an impulse, or you might get another three-wave. That's the other thing that you might get. So now, is everybody doing okay with that information? Welcome back, Christina. Everybody doing okay with that information? I want to show you now how the market gets you a little bit by changing from simple to complex. And I want to show you how I know, like, potential wave paths. You'll see me in my videos draw these different wave paths. Well, I could do this or this or this. And I want to show you where I'm coming from when I do that. If you guys are a go for that, just let me know that. Just let me know where you're a go. Sometimes I feel like I'm talking to myself, and I have no feedback. I can't see you, so I don't know if you're getting it or not. So as long as you're understanding, you just kind of give me some feedback. Okay. Good deal. I got 3 of you there. Awesome. Sweet. All right, let me show you. Here's what can happen. So when we get an impulse to the downside, we got an impulse. What's going to happen after an impulse? You can't get another impulse. You've got to get a correction after that. So once you get your impulse wave, you need a correction. That needs to come about 50 to 60% of that wave generally. So we're looking for a corrective wave, right? But what might happen is it might do this. Now, what could happen here after that wave? So you get a 3-wave pullback. What could happen? Well, that's 3 waves. That's a correction. We could get another impulse to the downside, right? That's one thing that could happen. But what else could happen? What else could happen is we might get an X wave, which is 3 waves to the downside. Then after that, you might get another 3 waves to the upsides. What that would be is an ABC, ABC, ABC. That's a WXY correction. So what they do is they go from a simple correction to a complex correction. Now, you know how when the market is just kind of going sideways on you and price never seems to fluctuate that much? It just feels like it's doing this. What you're actually experiencing when you feel it going sideways forever, that sideways chop, is basically WXY. There's another thing it could be as well, which I'm going to explain to you in a little bit, which is what I think is happening in the market right now. It's actually a bunch of 1-2, 1-2s. So now, what could happen after this? After you get 3 wave, 3 wave, 3 wave, you get 3 wave to death. You know what you could get? 3 waves and then another 3 waves. And then you got WXYXZ. And they just kill you. All right. Now, let me show you. Okay, so before I go there, so I just want you to understand that there's a couple of options here. That after an impulse to the downside, you can get a 3 wave up, and then you might get another impulse down, or it could be a 3 wave down and then another 3 wave up to make it a complex correction, WXY. Okay, so understand that that's a potentiality always. Now, when they want to eat away time and take a lot of time with it, that's what you're going to get. Now, what I want to continue doing with you tonight is showing you the difference between an impulse wave and a corrective wave, because you have to be able to identify an impulse wave. Now, let me show you an impulse wave that looks like a correction. An impulse wave that looks like a correction. Sometimes off of a move, off of an impulse wave, what you'll get is this. You'll get a really, really steep impulse wave, and it won't look like that. It'll look like straight up like that, right? And then off of that impulse wave, here's what you'll get. You get something that looks like this. It'll be 3 waves, 3 waves, 3 waves, 3 waves, 3 waves. And it forms a wedge. What you're going to notice is that it's 3 waves. Like that. And it's shaped like a wedge. What you have when you get something like that is a 1, 2, 3, 4, 5. Okay? And that's what we call a diagonal. And that actually is an impulse. That's an impulsive structure. Okay? Now that's a big deal for you to understand. Why is that? Because when you get a diagonal, it's always an impulse, and it has to be in the position of an impulse. Now, I've got some other things I need to teach you guys, and it's at 10:40. You guys doing okay with this information? Is this too much right now, or are you doing all right? I figure I'll go to 11, if you can handle it. Okay, good. All right. We'll go to 11, and we'll just get as much as we can. Now, the reason this is a difficult structure is because it has 3 waves in it. And remember, when you start to see 3 waves, what are you thinking? You're thinking correction. When you see 5 waves, you're thinking impulse. And so when you see 3 waves, you're thinking correction. But what happens is, again, you'll start to see this correction, and then you get another one, and then you get another one, another one, and another one. And it makes this diagonal shape like that. Okay? That's what we call a diagonal, and it needs to be in the place of an impulse. Now, something I haven't told you. Now, in a regular zigzag correction, guys, in an ABC, the A wave is 5 waves. I did tell you that last week, but I didn't review it this week. The A wave is 5 waves. And when we see a 5-wave structure like that, what do we call a 5-wave structure? Who knows what we call a 5-wave structure like that? Oh, nice. Tanya, it is 10:45 at night where I am. It's an impulse. It's impulsive. Very good. So the A wave of an ABC correction, guys, is going to be an impulse, generally speaking. So when you see 5 waves in a corrective position, okay, when you've had a big impulse and then you get 5 waves off of that, that could be an A wave. And so you got to understand that. So after that 5 waves, what should B always be? The B wave is always going to be 3 waves. Okay? And then the C wave is always going to be 5 waves, y'all. So a C wave is also an impulse. Now you need to know that. So in an ABC, it's a 5-3-5. That's a regular zigzag correction. And so in a C wave, it's going to be 5 waves. Now here's the kicker. So you see that 5 waves there, and you think, okay, you got an impulse. So what would you expect after an impulse? You expect a corrective wave, right? But that 5 waves right there, okay? This is a lot of times what you're going to get. You're going to get a 3 wave after it. You're going to start to get a diagonal. And it begins to look corrective, but it's not corrective. It's actually in the place of an impulse. So either it could be the 1 wave or an A wave. Okay? So when it's at the beginning of a wave, it's either a 1 wave or an A wave, and we don't know which. Okay? And sometimes you can get a diagonal at the end of a diagonal can happen in a C wave. So a C wave can be a diagonal and an A wave can be a diagonal, but B can never be a diagonal. Okay? Now a diagonal always has to have 5 waves. Okay? A diagonal has to have 5 waves, and each of those waves has 3 waves in it. Let me show you guys a diagonal on the Bitcoin chart. Go down to the 1 hour. To where you can see, go back to September, go to September the 6th on the Bitcoin chart. Good job, Hamed. You're a good student, man. You're a very good student. So on September the 6th, right here, I'm going to show you. You see that right there? That is a diagonal shape. There's a couple of ways to count this. You could count this as an A wave because there's 5 waves in there. And that's B. And all that's C. Now that C wave is really the diagonal right there. That C is the diagonal. Let me zoom in and show you. One, 2, 3, 4, 5. See them? And what you'll notice, there is 3 waves there, 3 waves there, 3 waves there. Yeah, it's hard to see the 4, but there's 3 waves in everything. So this is actually an ABC, and the C wave is the ending diagonal. It's called an ending diagonal. Okay, but there's a diagonal right there. And you got 3 waves and everything. All the waves, but there's 5 waves. And something else I didn't mention, and I need to mention it. The 1 wave and the 4 wave will overlap. See how the 4 overlaps the 1? It can do that in a diagonal. It can do that in a diagonal. Thanks, man. Appreciate that. Okay. Let me show you another diagonal. They're all over the place in this wave right here. We got diagonals galore. Let's look at them. Shall we? Come. Let's look. I believe, I'm going to go down to the, let's see, I'm going to go to the 15-minute chart. Right here at the beginning. So we had this impulse wave. Now, this impulse wave, that could be a 1 wave, but what else could it be? What else could it be, boys and girls? In my count, that wave is A, B, C. I haven't talked about the expanded flat much. I've said what it is, but I haven't I talked about it last week. So that's my C wave. It's an impulse. It's 5 waves. Okay. So after that impulse, to me, that's the end of a correction, A, B, C. Now I'm going to go to the 15-minute chart, and I want to show you this wave here. I believe, though it's not the best in the world, I believe this wedge-looking thing, not the best in the world. It breaks the lines a little bit, but it's generally a diagonal. Let me show it to you. You got a 1 wave, 2, 3, 4, and a 5. See how the 4 overlaps the 1 right there? I believe that's a 5 wave leading diagonal. So this could be the A wave, or it could be a 1 wave. It's in the place of an impulse. Yes. So you know how when you're on some websites and they say when you see a downward facing wedge like this, what do they normally say? How does a downward facing wedge break? How does that break? It breaks to the upside, right? That's what they tell you. It'll break to the upside. But why? Here's from an Elliott wave. Why? Because it's an impulse wave. 1, 2, 3, 4, 5. That's what it is. Now what's going to happen after 5 waves? We're going to get a A, B, C correction. It's not going to break up forever. It's just going to be a little corrective wave, an ABC correction. But that's beautiful because you got an entry. And then you're going down, buddy. You're going down. So when I see a diagonal, I love it. I love seeing diagonals. Why? Because it tells me what's going to happen next. Okay? So when I saw this diagonal here, what am I waiting for after a 5-wave impulse like that? I want to see a 3-wave correction. Well, that's why when I saw that, I'm like, ooh, buddy, there's a trade. Let's take it down. Well, they doubled it on us. That's what made that hard. Okay? But here we go. There's your trade entry if you can nail it up there. Up here. There's your entry. We entered right here. Okay? Now, after a 5 and then a 3-wave pullback. Now, it's a WXY, but it's basically a 3-wave correction. Okay? So there's a 5-wave impulse, a 3-wave correction. What do we expect to be next, guys? What do we expect to be next? And this is why, if you've been watching my videos, this is why I believe we're going down. I'm expecting, I got a 5-wave here, I got a 3-wave there. I want to see 5 waves to the downside. I want to see 5 waves. Because when I see When I see 5 waves and then I see a 3-wave correction, you know what I'm looking for as an Elliott wave guy? I'm looking for the next 5-wave impulse after that. I'm looking for the trend to continue. That's what I want to see. Boom, 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 like that. Now that could be an ABC, or it could be a 1, 2, 3. And how do we know the difference between this? How do we know? How can we tell if that's an ABC or if that's a 1, 2, 3? Well, here's what we do. We take the fib extension and we measure the first wave. So it starts right here. Come on, fib extension. There we go. Starts right there, ends right there. We extend it from the second wave right there. And wherever this next wave comes to, if it was 5 waves and it comes to the 1-to-1 extension, we know that's an ABC. So where are we going to take this trade? If we get a wave like this, guys, A, B, C, and it comes right here, stops right there, we got 5 waves here and 5 waves there, where's it going after a 3-wave correction? It's going to the moon. So we're going to go long here. So that's why I'm saying let's wait and see what kind of structure we get. Let's see what fibs it comes down to. So that's why I did at the beginning of the lesson, I said let's draw an impulse on your screen and let's draw an ABC correction, and how do we determine the difference between the two? You measure them. You want to see the third wave. If it's an impulse, you want to see the third wave come up to the 1618, okay? And then on a correction, you want to see that third wave come to the 1-to-1 extension or the 127 extension. So you guys are going to have to hone this skill, okay? Now, so here's what I'm expecting in Bitcoin. Because I have a 5-wave beginning and then I got a 3-wave second wave, I'm looking for a 5-wave next. And so the question is, I need to see 5 waves. I want to see an impulse wave. This is coming down so correctively. It's just crazy. So we still have to allow the possibility for a stinking triangle. Possible. Because we can have triangles. But and then that this would have to be 3 waves and not 5 waves. So we have to understand that when we interpret a wave, we could be wrong in our interpretation of the wave. I might be looking at that and saying, yeah, there's 5 waves, but it might not be 5 waves. And so we need to recognize that potential. I got a question. How low? Okay, well, let me talk about that in just a second, Spartacus. Okay, but it has not started with the impulse wave after 5-3. Okay, yes, it has. And let me explain to you. That's a really good question, Libasek. Yeah, whatever. Yeah, I'm gonna call you Amy. I don't know. I don't know what that is. All right. So we'll call you L. Yeah, we'll call you L. Okay, sorry. So yeah, so we got 5, then we got 3. Now let's look at the wave structure here, because this is really. So I'm going to zoom in here. I'm on the 15-minute chart. Okay. Now where's my 1 wave? Now what I had to do is I actually had to go down to the 1-minute chart. I'm not trading off of the 1 minute. I want to be clear, guys. I'm not trading off of the 1-minute chart. I do not recommend you trade off the 1-minute chart. I'm simply getting information off the 1-minute chart. Right here, I have a 5-wave impulse wave right there. That is my 1 wave, in my opinion. That is the way I'm interpreting it right now. So right there, I'm going to circle it. Now I'm going to go back out to the 15-minute chart and let you see it. So there's where I circled. Right here. This first wave, my one wave, is right here. 1, 2. You say, well, what's this, Jim? Right here. 1, 2. This is the 1, 2 of the third wave. 1, 2, 3, 4, 5. Actually, I'm going to put my 5 right there. Let me show you. Now, here's what we need to do. We need to take our fibs and we need to measure my 1, 2. Okay? So I'm going to take my trend-based extension tool and I'm going to measure my 1 wave right there and then my 2. And I want you to notice, what do you see? If this is 1, 2, where's my 3 wave? What fib extension am I looking for? The 3 wave. See the 1618 right down here, my yellow? 1, 2, 3, 4, 5. They're my 5 waves right there of the third. 1, 2, 3. 4, 5. So there's my, here's my impulse wave right here. So I actually have an impulse wave right there. Now, let's see if it any of the rules are broken. The 4 wave does not retrace into the 1 wave region. We're good. The 2 wave doesn't retrace beyond the 1. We're good. The 3 wave is not the shortest. It happens to be the longest here. We're good. This is a good impulse wave. 1, 2, 3, 4, 5. That's the way I'm counting that. Now, what follows it? Look here. How many waves do you see there? That looks like a 3 wave movement. It happens to break the rules, okay? It happens to break the rules, and it goes beyond the 1618, but it's not a rule, it's a guideline. But still, I got a nice little 3 wave to follow. There's a corrective wave, okay? But then, look what we got here, and this is the way I'm counting this. See this wave right here? That's 3, 3, and 5. Who knows what a 3, 3, 5 correction is? When you get a 3, 3, 5 like that. Who knows what a 3, 3, 5 is? What kind of corrective wave is that? It could be, yeah, this is an expanded flat. And the reason is, why is this expanded and not a regular flat? Three, 3, 5 is not WXY. WXY is a 3, 3, 3. It's an ABC with an X wave and another ABC. It's 3, 3, 3. Yep. So remember the 3 different types of flats, guys. All the flats are 3, 3, 3. Excuse me, 3, 3, 5. Okay, so a flat is a 3, 3, 5. So remember, you can have a regular flat where the B wave retraces 90% to 100% of wave A, and then the C wave can come up here, it can come here, whatever. There's a regular flat. An expanded flat is when the B wave comes below where A started, okay, and C goes on. And then a running flat is when the C wave is shorter than where the A started, like that. So those are the different kinds of flats. And you can have an expanded running flat, like that. Alright, so what we have here is we have a 5 wave impulse. What comes after that? we need a 3-wave correction. We got a 3-wave, we got a 3-wave, and that's actually a WXY in there, and we'll have to show you that later on. And then we've got a 5-wave. So right here we have this flat correction in here. What do you think came next, guys? So this 5-wave impulse is what I'm going to call a 1-wave. That's 1 right there, 1. And this flat correction here, I'm going to call that 2. What comes after a 1, 2? Well, we need a 3-wave, right? So let's look at that. Now I'm going to put the FIB extension. If I'm right, and this is a 1, 2 wave, I'm going to put the extensions, the FIB extension on this guy. Where should my 3-wave come when I get it? Where should my 3-wave come? 1, 2, 3 should come down here to the 1618, 4, 5. That's what I'm looking for right now, guys. I'm looking for something like that. Now, if that's the case, then what's going on right here? What's going on up here? What's all this sideways stuff? Well, let me show you. What I believe is happening, I'm going to move my 3-wave over here. What you have here is a 1-wave, 5 waves, a 2-wave, that's 3 waves, and now you've got this 5-wave. Here we have another impulse wave right here. See it? Now, it's kind of hard, but there's 5 waves in there, and it's kind of straight down. It's not 3-wave-ish, it's 5-wave-ish. Okay? So that to me looks like kind of an impulse wave, 5 waves maybe. So I'm calling that a 1, and then I'm calling that a 2. 3, 4, 5, like that. And those are going to be the sub waves of the 3rd wave. So this is a big 1, 2, and this is a 1, 2 of the 3rd wave. So let me show you. Oh, wow, excuse me, I just burped. I apologize. And it's 11:03, so I know we're going long tonight, but let me finish this up, and then we'll add some more next week. Okay. So let me show you what kind of structure I think we have here. First off, I've got a 1, 2, 3 wave. Let's measure that wave. Let's just analyze tonight to finish this class. Let's analyze this wave on the micro scale. Come on. This wave right there. Let's analyze that wave on the micro scale. So we're going to go down to the 5-minute chart. And let's just analyze that wave right there. So my first wave is right here, up here, and then down here. So let's measure that. Let's put the measurement on there. Click on the bottom of it, the top of it, and then back down to where the next wave starts. Tell me where does this top of the wave, before it pivots back down, where does it come to? Do you see it? A, B, C. Do you see? This came to the 127 extension. That's an ABC. This is a 5-wave C wave. That's an A, a B, and a C. It's a weird shaped one, but it's an ABC. Because the extension of the first wave comes to the 127, which is what they do. Then now the next wave. Let's look at the next one. So we got an ABC there. I'm going to take the wave off. So we got it labeled. Let's label it a different color. White's kind of an easy one to see on my chart. Now, just looking at this without doing anything, I see 3 waves here. But notice what I see. I see this. A 3-wave, a 3-wave, and a 3-wave. That's an ABC, an ABC, and an ABC. Okay? What do you get when you get a 3-wave, a 3-wave, and a 3-wave? Who knows what that is when you get this? Who knows what that structure is? What we would call that? And Aries, ask your question with a complete sentence, please, if you would. I want to know what this structure is right here. Oh, yeah, okay, there you go. That's a WXY. That's exactly right. Excellent. WXY. So we'll take the wave off of that guy. So now we have an ABC followed by a WXY. 3-wave to death. No, we're not 3-wave to death because how many... What is this one, guys? What is that? That's an impulse, isn't it? I mean, even if you can't see all the 5 waves, they're there. That's an impulse wave. I mean, is there any arguing that that's an impulse wave? I mean, you don't even have to look at it or count anything. That's an impulse wave. So we got 5 waves here. So what happens when you get a 3-wave, then a 3-wave, even though that's a complex 3-wave, and then a 5-wave? What is that? A 3, a 3, and a 5. Oh, wait a minute. A 3, 3, 5. We just talked about that. What is that called? Not a diagonal. No. Tanya, a diagonal will be 5 waves, and all 5 of those waves will have 3 waves in it, and it'll look like a wedge. So remember, Tanya, a diagonal will look like a wedge, and it'll have 5 waves in it like this. The 4 and the 1 will overlap. What is a 3-3-5? A 3-3-5 is a flat. But this one, this wave right here comes below the origin here. So it makes a little bit of a lower low, but you see the 3 waves, right? So this is an expanded flat. Correction. So there, that's expanded. So what we're going to label this is A wave, B, and C. I'm going to make it larger. We'll make it yellow. So there's our A, B, C. Those are our expanded flat. This is a corrective wave. What happens after a corrective wave? An ABC correction. What happens after that? We should get impulse. We're going to go down, guys. Let me just remind you. I mean, that's why I'm saying in my videos, I think we're going down. I think we're going down. I think we're going down. I keep saying it all the time. And I know I sound like a broken record, and I'm probably one of the only ones on YouTube saying we're going down. I don't know if any. I don't know. I don't watch anybody else, but I just can't see anything else other than down. But let me just show you. I'm gonna clear my chart here. You see this wave right here? We got 3 waves. 3 waves, and then 5 waves. That's a 3, a 3, and a 5. That's an expanded flat, guys. It's just a really big macro expanded flat. What happened after that? What happened after that? That's what happened. Okay? Let me show you another expanded flat. See this one right here? I mean, it went up really fast. What did everybody think when that went up really fast? Oh, I mean, remember, there's none of this other stuff was there. So what did everybody think when that went up really fast? I mean, let me show you. Let me tell you why, in my opinion, standard TA without Elliott wave doesn't help much. Why I don't like it. why I think it's lacking. It doesn't mean you can't, it doesn't mean Elliott wave is the only thing. I just think Elliott wave needs to be part of your analysis. So this, let's just pretend this is all we saw, right? What would you think in the chart if you saw this coming down? Looks like 3 waves, right? And then we got this big reversal. This big reversal wave where, hey, we broke this level. We broke it. And it was a really fast. We had a big wick down here. So let's use candlestick. We got a wick to the bottom side. That's a reversal. We got a 5-wave impulse there. I mean, we got a reversal. What would you expect? We get a 3-wave pullback, and then we're going to the moon. Like that. That's what you'd expect, right? Unless you understand that what you had here was a 3-wave here, and then what you had, if you look at the micro level here, you've got 2 3-waves here. In other words, this structure was 3 waves. Now, you can't end with 3 waves. You can't have a 3-wave and then a 3-wave and then have a 5-wave after that. If that's the case, because of this structure, okay, there's a flat. So what happened after this? After this steep, really big candle that went up, it was from 96 to 10,003. That was almost $1,000. What happened? It started just kind of making its way on down. It's kind of slow, kind of came up a little bit, and then boom. Eventually, it just tanked. And it tanked right here when it broke the bottom of it. Still going. All right, what do we got here, guys? What do we got here? 3 waves. Okay. 3. Now, this is a hard wave, okay? But it's a very complex WXY. That's a 3-wave, and then we got another 3-wave. Actually, it could be fine. We've got kind of a flat shape. So what happened after that? It started coming down. It's just slow, methodical, came on down. We had another correction, and then boom. Now, stop it. Now, notice we got a 3-wave, a 3-wave, and then we got this big one. It's, to me, this is just a big expanded flat. And so on all the other flats that we got that had that shape and that, what has price done? This is what it did on all those other ones. Why would we expect it to do anything different here? Well, Jim, because the market makers, maybe, I could be wrong. But my first idea, that's an expanded flat, and we're coming down, guys. That's the way I interpret this market. That's the way I'm interpreting the market. Now, something interesting I'm seeing here. See the shape we have here? Could this be the makings of a large diagonal maybe? Possibly. What I believe could happen is we got this one here, this one here. Okay. Now we need to see this come on down. We need to see this come on up. and on down. I don't know if that's going to happen or not, but it could. It could happen. And wouldn't that mess everybody up? Because what's everybody waiting for? We're waiting for 3 waves to the downside, right? We're waiting for price to get here. All the TAs saying, okay, $8,600, $8,300. I mean, I'm even saying that, right? We got to watch those levels. So price is going to come down here. It'll come down in 3 waves. It looks corrective. Boom, we're going to the moon, baby. No, we're just going to make a little expanded, and then it's going to come on down. So we're going to start with a wedge, and that'll be an A wave. Then we're going to get a 3-wave B wave, and then we're going to get our C wave. That's going to take us down to $6,000. And what that's going to do, in my opinion, is be our W, X, Y, W, X, Y is finished here, X, Z. And that's what we're going to get, I think. That's a working possible chart. There are other counts, but that's my number one count, and that's what I've been presenting to you in my YouTube videos in the mornings, for the most part. Okay, guys, it is 11:20. That's a lot of information. I hope it's been helpful for you to just kind of start to see this thought process about how we begin to take the information, measure waves, try to say, okay, what kind of correction are we seeing? You just begin to put the information together and start to build a chart with it. And this is how we begin to think about the charts with Elliott Wave. Okay. Yep. Eamon, I think, is calling by November the 4th. I think this should be a big deal. So, yeah, there's a lot more we're going to keep on with this next week, guys. But what I want you to do this week is practice using your FIB Extension Tool. Okay? Practice using your FIB Extension Tool. You need to do that. That's critical. Okay? Practice, practice, practice. Measure the A wave and the B wave. Okay? So right here, here's the bottom of an A wave. Here's the top of the A. Then come to the B. This came to the 2618 extension, and expanded flats can do that. They generally come to the 161 extension, but this one came to the 261. All right, any questions before we go? I'm pretty tired. I hope that was helpful to you. I hope you enjoyed it. Hope that's helpful information. And, you know, what I want to grow in as a trader personally is I've seen so many of these expanded flats. I want to learn to recognize them, or at least the possibility of them as they come. So the hallmarks of an expanded flat are the second wave's going to have 3 waves. It's going to break the low and kind of stop. Okay, and we're going to have divergence here at the bottom. We're going to have divergence, and so as long as we get that divergence on the other time frames, Aries, hey, thank you, man. I appreciate that. That's very, very kind. Very, very kind. Thank you so much. That means a lot to my family, and so I thank you. Okay. All right. If you missed it all, there's lots and lots in this video. So make sure that you guys just rewind it, go back through it, see if you can grab it. Grab as much as you can. It's going to take you a year or so to assimilate this information. Okay. I mean, maybe 6 months. I think 6 months to a year to be able to take all the information and begin to see the patterns in the chart. So just keep working with it. Don't give up. I'm around. Ask questions. If you want some more, focused, attention, you can always join the trading group. It's a very, very small amount per month just to go to support my family for the work I do in there. Very, very small amount. And there's different levels you can join on. So just join the Patreon, which is at the bottom of any of my videos, and you can join there. You can see those levels. And that just kind of goes to support my family. I'm looking to become a full-time trader by the end of the year, and then do this full-time to help you guys. All right. Hey, thanks a lot so much. Appreciate it. I don't know if I'm a smart man, but we have a joke in my house. Either you're a smart feller or a fart smeller, one of the two. So anyway, I hope you guys have a fantastic evening. Aries, thanks for that gift. I really appreciate it. And you guys, thank you for showing such appreciation with your kind words. If I can help you in any other way, feel free to message me at any time. We'll bring another video in the morning, and we'll talk to you guys later. Bye-bye.